Hello and welcome to another Shastrartha session. Today we'll be discussing the draft directions that RBI has issued. This is the fourth draft directions that we are discussing, and it is on the lending of against gold collateral. So, sir, lending against gold collateral, what is the current regulatory framework? Because banks and NBFCs have been extending loan against gold collateral, and this is quite a common loan product in the southern part of the country, and right now even in the other parts of the country. What is the existing regulatory framework that we have for gold loans that needed to be reviewed and revised by the RBI? We have it for banks, for NBFCs, there are different guidelines. Please throw some light on the regulations.
So let's start by saying first, Anita, that gold, very obviously the most precious commodity in the country's every household. And if I were to quote Munshi Premchand, the great Hindi author, he said कि स्त्री को अपने पति के बाद सबसे अच्छी कोई चीज लगती है तो उसके उसके जेवरात. It's something which is most precious. For some ladies, I think it's even more precious than the husband. But nevertheless, it's one of the most precious assets to every household. I wouldn't even talk in terms of a lady, and therefore, in terms of value, but obviously over the last, I think more than 2 years, the prices of gold have consistently been growing, and therefore, gold lending seems to be quite a safe asset class because the gold is physically in possession of the lender. Lender does not have to take any repossession efforts. It's completely backed by, I mean, one of the most liquid and one of the most precious assets in the world. And therefore, every lender was getting into gold lending. It was originally mostly NBFCs were active. Some of them are very prominent into gold lending. They are gold lending NBFCs specialized into gold lending. And of late, most of the banks were also making forays into this business. While gold lending, therefore, was regulated by two separate guidelines, one for banks, one for NBFCs, there was a minor divergence. The one for banks was more detailed, the one for NBFCs was a little less detailed. Prominently, people were able to read somewhere in the NBFC guideline that the 75% loan to value ratio needs to be maintained only at the time of giving the loan, not
Right.
the maturity value of the loan, which wasn't the correct interpretation in our view, but that's what people used to read. And therefore, that was the basis for NBFCs to thrive because the most important aspect in gold lending is the extent of funding. Because the borrower is in distress, the borrower wants the last emergency when all options are exhausted, have nothing else to, I mean, go for. That's when a lady decides to put her bengal into a pawnbroker and get money because I need money for, let's say, some emergency medical process. Under the situation, the essential part in gold lending always has been what's the extent of it? Can I borrow more? So if for the same gold bengal, a banker would give less money, a money lender will give, or an NBFC will give more money. That's the basis of competing for gold lending business. So this is, I would say, this was the minor difference between the two. But in any case, for banks, there were separate PSL guidelines as well that
Right.
banks could lend against gold jewelry and still classify the loan as agree loan, which is where the RBI found a lot of irregularities. And Anita, you would recall that last September, there was a very significant letter from the RBI indicating they found several irregularities.
Irregularities.
Among the irregularities was tagging the loan as agree loan without verifying the end use. So that was a very important concern of the regulator. So this, the so-called draft direction, Anita, is a number one. It's to harmonize the rules. That's what RBI is increasingly doing.
For banks and
For,
NBFCs.
for co-lending, for example, the broad same set
Right.
of guidelines.
Same
For
set.
several things, they are bringing
Similar
comprehensive
guidelines,
guidelines
yes.
which are applicable to both.
Both banks and
That's
NBFCs.
part one. Part two, this was of course to try and eliminate scope for any arbitrage or kind of discretion or the excesses or kind of malpractices RBI would have noticed during the inspection. They're trying to overcome that. So lay down a very comprehensive process. This is how you value or assay the gold. This is how you keep the gold. This is how you auction the gold. This is how you return or release the gold. If you don't do it, then you pay 5,000 rupees per day, etc. So they're kind of procedural rigor with which gold lending has to be carried out because it's an extremely process driven business And the RBI doesn't want customers' complaints to pile up for gold which was pledged but wasn't returned. So therefore, that's the major stance of the new draft directions, Anita.
I think two important points from here. You mentioned about the irregularities that the RBI had listed out. So, are these guidelines in a way aiming to fill those gaps and address those irregularities by providing operational guidelines for the banks and NBFCs while they are lending against gold? And also, one more point that you mentioned about the disparity or the gap that was there between the gold loan practices of banks and NBFCs. Nowadays, it is very common for both banks and NBFCs to come together and enter into a co-lending transaction and lend. In case, do the guidelines still have that kind of a disparity between the loans that will be extended by banks and that those that will be extended by NBFCs? And if the disparity is still there, then what happens in case of a co-lending transaction between a bank and a NBFC?
So I think there are bundle of questions that is getting, I mean, in coming into this question. Number one, disparity, is it there?
Right.
Number two, if the disparity is there, how does a co-lending happen? Number three, you wanted to talk about the process, and are you saying that the RBI is trying to take care of the procedural lapses or kind of malpractices found by the RBI? So let's maybe start with that question. That's simpler. Yes, this is a fairly detailed guideline in terms of processes. Everywhere the RBI has done micro regulation of how would the customer visit कर रहा है तो आपकी ब्रांच में आ रहा है कि नहीं, फिजिकली प्रेजेंट है कि नहीं, आप उसके सामने वैल्यू कर रहे हैं, वैल्यूअर ब्लैक लिस्टेड नहीं, etc. They go into very minor trivial details of the entire process.
Right.
So wherever regulation gets into processes, it tends to become inflexible, because the more the detail, the more the lack of flexibility. So therefore, in that detailed process oriented draft, the flexibility of business is anyway getting compromised, because somebody wants to bring, for example, let's say I would like to do home lending. I would go to customers' home and lend there. Probably the RBI says, well, you need to be in the branch.
Right.
Can digital or physical lending be done? Probably there also the scheme seems to, the possibility seems to be limited, because mostly it's talking about physical presence of the customer and physical valuation, physical custody, etc. etc. That's the process, I mean, the downside of the detailed process. But talking about the disparity, yes, in a very important manner, that's something which has been talked about quite a lot, that the draft directions talk about two types of loans: an income generating loan and a consumption loan.
Oh, right. Yes.
For the NBFC, irrespective of the purpose, consumption or income generation, the LTV is still capped at 75. And by the way, now it's very clear that 75% is based on the maturity value of the gold and not the value today. So that's part one. There is a distinction. For NBFCs, the LTV of 75% applies both in case of consumption loans as also in case of income generating loans. When it comes to banks, the LTV ratio may be relaxed. The bank at its own option, and maybe from its policy, the credit policy, the bank may go for a higher LTV in case of income generating. So therefore, there is sort of a discrimination, and I think there is a great bit of concern, and people have talked about this gap, that NBFCs have been put to a disadvantage. Of course, I'd like to talk further on that. So maybe I would like to discuss further on whether this gap is actually realistic, or is it real, or is it simply perceptional. However, when it comes to co-lending, first question basically is co-lending itself. The present framework of co-lending is two lenders coming together. When it comes to gold lending, there's a physical pledge with one particular lender. The question is, when there are two co-lenders, the pledge is still with one. I would still think that's okay, because as in case of mortgage of, let's say, home, the house is mortgaged in favor of one, though the benefit of the mortgage occurs to the benefit of both the lenders. Similarly, here the pledge is with one, but for the benefit of both. So there are rights as to who keeps the pledge, who does the borrower interface, where does the borrower actually come back at the time of release. All of that could be laid so as to be compliant with the draft regulation, but to my mind, it's possible. And there comes the question: if it's co-lent between two, which LTV will prevail? I would obviously say, well, then the lower of the two. But Anita, we still need to talk about that income generating versus consumption loan.
Yes. I think that is a major
That's a
distinction that
very,
has
very
been
major mistake.
created.
Absolutely.
Because you mentioned about consumption and income generation, so mostly we would say, like you started saying, that gold is the last option when a person would want to pledge the jewelry, and so it could be in terms of emergency or some maybe
Family
that
wedding.
kind of family wedding or that kind of a need wherein liquidity is required and you are forced to maybe
Sure.
pledge your jewelry. So that is the consumption loan that we understand. For income generating loan, is gold the only collateral, or do we have some other collateral? Because RBI has defined the term primary security, it has also defined the term collateral
Collateral security.
security. And in terms of the income generating loans, I think RBI has been emphasizing on the fact that gold will be the collateral, which is
Correct.
after the primary security. So, in both these two classifications of gold loans, what are the other, you can say, distinctions that we can
Sure.
think of?
So it's very important to understand the nature of an income generating loan. Gold itself cannot be the source of income generation for anyone. Gold cannot generate income. It might have some kind of appreciation in value, but that's not income that we're talking about.
Right.
Income that we're talking about, the borrower needs the money for some income generating activity. What could be that? That might be farming, that might be, let's say, business, that might be a trade. So the borrower has some business which is going to generate income, and the borrowing is needed for the needs of that business. That would mean using the gold. Now, here, of course, gold is not the primary security. In bankers' parlance, primary security is the security which is emanating from the business to which the money is lent. For example, I'm using the loan to buy a machine, the machine becomes primary security.
Right.
I'm using a loan to buy a house, the house becomes primary security. The other security is called collateral. Gold, therefore, can never be primary security, it has to be collateral only.
Because there is a restriction that I cannot be lending against for the purpose of buying gold. That is also
And
there.
of course, that the gold is, because it's gold is an ornamental form, it's not in gold form. So it's
Right.
not, you're not lending to a jeweler under the gold lending direction. That might be a working capital facility, but here the gold therefore is basically collateral. Now, in case of income generating loan, there are, just calling the loan as income generating or IG loan will not be sufficient. It's very important to say that the lender must have identified what's the nature, what's the type of business that you're engaged in, what's the business, what are the needs of the business, what's the term for which you need funding, what's the maturity of the loan, what would be the manner of repayment, because everything then gets connected with the cash flows.
Right.
Because that lending becomes cash flow connected, therefore it has to be related to the cash flow of the business. So in order to call any loan as an income generating loan, we need to be very careful, because one of those irregularities RBI detected during the September circular also was that loans were tagged as agri loans,
Without
merely
being
by saying that I have a
honest.
coconut tree at the back of my house and therefore I'm a farmer. I need the loan for whatever
Farming
else.
purpose.
Because obviously the coconut plant wouldn't need your funding. So here the issue is that the lending should be for a purpose, and the extent of lending therefore gets connected with the purpose, not with the value of gold. Most gold lending is based on the value of the collateral, value of the gold. But in case of IG loan, the extent of funding, the manner of repayment, the tenure, etc., will all come from the cash flows of the business to which, or the business for which the loan will be used. So, to my mind, calling a loan as an income generating loan, though the loan is primarily based on value of gold, may quite often not be proper at all. And therefore, that's where probably consumption loan seems to be the most appropriate classification for gold loans. If bankers are tempted to call it IG loan merely because LTV flexibility is there, to my mind, I think the RBI will probably not be, very happy with the classification, because mostly, also understand that gold lending primarily has to be a very, very fast turnaround loan.
Right.
Because you think of a woman whose husband is hospitalized and needs money for the operation. She can't wait to fill up a form and then wait for 2 days for the approval to come.
Loan to come.
She needs the loan now,
Immediately.
at the counter itself, across the counter. So across the counter lending and calling it income generating seems completely counterintuitive. Therefore, in many ways, gold lending would still be more conveniently, more appropriately called consumption loan. And if somebody is merely giving it the tag of agri loan, to my mind, not without regulators' unhappiness.
So you mean to say that in case we are tagging it as an, because the regulations also mention that if you are lending against the gold as collateral and there is a primary security, one, you need to ensure that you are monitoring the end use, documenting the necessary evidence to ensure that the end use is for income generating purpose, and at the same time you also tag that loan as a, not a gold loan but as the
Income
purpose that
generating.
income generating loan. So the next question over here would
And
be,
also just to say that if at all it's detected that the so-called IG loan was actually consumption loan, that it have all the rigor of consumption. That would mean the banker would be held responsible for giving it a wrong classification.
right.
And if at all the LTV exceeded 75, the banker would be, admonished for that as well. So there might be regulatory implications for wrongly calling it an income generating loan. Therefore, every banker has to be very careful. For NBFCs, I don't see much of motivation to classify the loan as IG loan. But for NBFCs, consumption loan is most EG, particularly because the LTV is anyway 75%. But for bankers, if at all they have a motivation to call it agri loan or MSME loan merely because that gives a PSL benefit, you need to be very careful that there might be implications if I have just used a wrong caption.
For the NBFCs also, will this not be a benefit that the NBFCs would want to sell off these loan portfolio if in case it can be classified as income generating? You are saying that the bank already has that leverage of having a high LTV, hence they may not be interested in the portfolio created by the NBFC with 75% LTV.
Well, I think to my mind, if the NBFC was to, for example, give it classification of an agri loan. So the question is when that agri loan is sold by the NBFC to a bank by way of, let's say, direct assignment, will the bank get the benefit of PSL? Because to my recollection, PSL directions say that if
There is a restriction, exclusion, that gold
yeah.
loans, but over there the exclusion is on gold loans, so gold loans are specifically
Correct. So
excluded.
if this loan is on the collateral of gold, I give it the classification of an agri loan, subsequently sold it to a bank, the bank may not get the PSL benefit at all. So there is hardly any motivation for an NBFC to classify a gold loan as an agri loan.
Okay. So next, I think there is a very common product right now also in the market wherein there is a jumping interest rate. Now, what is a jumping interest rate? Wherein the loan has been given at a lower rate of interest, it has been sanctioned with the repayment schedule to be on a monthly basis. However, in case you don't follow that repayment schedule and if you shift from a monthly to say a bi-monthly or a quarterly repayment schedule, in that case the rate of interest also
Jumps up.
jumps, and there is a very high jump in case it is shifting upwards. So these kind of gold loan products that are prevalent in the market, will the guidelines have any impact on these products
So
as well?
the jump is almost like that of a frog. It
Right.
jumps up from whatever to whatever, jumps quite a lot. So question basically, what is the motivation behind the so-called jumping interest rate loan? Quite obviously because the low interest rate seems appealing and the borrower is tempted to believe that that's the rate of interest he would pay, though practically he may not be able to keep up to paying the interest within 30 days, and if he fails it, he would lose the benefit of that lower interest. So the downside of the jumping loans is that it throws a kind of illusion to the borrower that is borrowing at a low rate, whereas actually he would end up paying the higher rate.
Right.
There is, I think, towards the end of the direction, there is a para in the draft regulation saying that lenders shall not make any misleading
Statement.
statement so as to, give unnecessary or unwarranted publicity to gold lending as a product. That would mean any kind of illusory statement or kind of misleading statement that you make about gold loans will be taken as, a breach of the regulations. To my mind, one should be extremely careful to structure loan products such that the rate of interest shown to the borrower is the rate of interest that the lender actually aims to make. But the lower interest obviously is just a kind of a temptation rather than a reality.
Right, sir. So, any other operational difficulties or any other points? Because till now we still have time to maybe reach out to the regulator and give our comments on these directions. Any specific comments that you have on the draft directions which will cause a issue while implementation?
I think in terms of custody of the gold, it talks about gold to be kept at the branch of the bank. I think that's probably throwing too much of burden security cost and security, I mean, threat. Because after all, if it's known that the gold is stored at a particular place, that also throws a temptation for criminals to be aiming at the place.
Right.
It would have probably been better if specialized vault agencies, for example, banks, would have
been allowed.
been permitted. Why should the gold necessarily be kept at the NBFC's own branch? And that is also the branch at which the loan was originated. So, number one, that limits the number of branches and therefore doesn't permit geographical inclusivity in the gold lending product. Number two, it throws unnecessary cost of, I mean, the establishment. It becomes a costly product to monitor. I think regulator can take a more prudent approach in terms of safekeeping of the gold. That's part one. Part two, I'm not sure whether you intending to ask it, but I will anyway want to talk about repledging. A lot of people have.
Yes.
You were wanting to ask.
Yes.
Why didn't you ask? Okay.
Repledge, I think, is something that has been restricted under the guidelines, and it has been mentioned that you cannot repledge the gold. Now, what do we understand by repledge is that if I, as a lender, have taken the pledge of gold from you and I have lent it to you, I cannot use that same collateral and
To borrow from
to
someone
borrow
else,
from
say
someone
from a
else.
bank.
Right. Now, is this something that is new, or because I did not find it that if I have taken pledge and I have accepted the pledge, I am actually the holder as a bailee,
Daily, correct.
as a bailee, I am keeping hold of it. So I may not be using it. So my rights as a bailee may not allow me to
Correct.
again borrow against the same gold. So now
Yes,
there is a specific restriction for
This restriction was always embedded in the law. Now the RBI is saying it in so many words. There was never any legal possibility of anyone pledging someone else's gold. How can I pledge somebody else's gold?
Right.
It's not my property. I'm just a lender. I'm holding it only as a collateral. I cannot,
right.
I mean, pledge what I have. I cannot pledge someone else's property. For
I don't
example,
even
in case
have
of
the ownership.
stockbrokers, you understand, stockbrokers, very famous ruling by SEBI, where stockbrokers were pledging client stock and SEBI came heavy on the brokers.
Right.
So this always was the law. There wasn't any possibility of repledging at all. So what the RBI stated is nothing but a restatement of the law. But do understand there's an important point here. If I am an NBFC giving loan against gold, can I borrow money from a bank? Answer is yes, I can. Can I borrow money against the pool of gold receivables? Answer is yes.
Yes.
Can I hypothecate the gold receivables? Answer once again would be yes.
Yes.
Are those hypothecated receivables backed by pledge of gold? Answer is once again yes. But I'm not repledging the gold. Why? All I'm doing is I'm hypothecating my receivables.
Right.
My receivable means I have a right to receive money from the borrower. The borrower in turn has right to redeem his pledge. If the borrower has paid the money, the receivable is no more. Receivable has become a receipt. Borrower walks away with his pledge. Now I have to pay this money to my lender. That becomes my obligation. That would mean my banker cannot claim a right on the pledged gold because that's the borrower's property. My banker can definitely claim a right on the money that I get from the borrower, either by repayment of the loan or by auction of the gold.
Enforcement of
Even if the gold is auctioned, the banker would have a right
the
on that.
proceeds
But
will go.
that is anyway not repledge. So let not anyone think that repledging means I cannot borrow against the gold portfolio at all. I surely can borrow, but all I can do is hypothecate my receivables, not the physical gold which is pledged with me.
I think I'll have one last question. Top up lending, top up facility against loan. So now this is a very common product wherein if the LTV, if the loan has amortized, then maybe I'll have that headroom of LTV, and the top up facility can be availed by the borrower against the same gold. What is the kind of scenario after the issuance of these draft directions on the availment of top up facility?
Right. I think two things we need to talk about. Number one, top up. Number two is the renewal of the gold loan. Very important point once again. Top up basically means what? Top up means if the loan is amortizing. Mostly top up would arise when the LTV has fallen over gold. LTV might fall because of rise in the price of gold, but price rise in gold versus accumulation of interest, interest accumulates faster than the appreciation in gold value. That's the basic rule of economics. Therefore, if the loan is bullet repayment loan, which is how mostly gold loans are, the chance of LTV declining merely because of price increase would not be there. If the loan is amortizing, of course it is. If the loan is amortizing, therefore LTV is fallen. That leaves a space here for giving a further loan. As long as I'm within the limit of 75%, well, I can give a top-up loan. There's no issue with that. But another so-called top-up loan, which is, as you are aware, is prevalent in the market, is that the lender would try to increase the LTV ratio. I can give 75% against gold value, but borrower needs 80. Therefore, I'll give a 5% by way of a personal
Unsecured.
loan, unsecured personal loan.
Right.
That is a different issue, but that would probably be more like an aberration. This was never intended, because after all, that so-called personal loan or unsecured loan was extended in the same time as the gold loan, and therefore very clearly seems to be just a way to increase the lending wealth. That I think would be seen with objection. So that's as far as LTV or the so-called top-up lending is concerned, Anita. But another issue is renewal. Now here again, the guidelines say that, the draft directions say that if it's a bullet repayment loan and the borrower wants renewal, the renewal may be extended provided the borrower has serviced the interest. That would mean the borrower services the interest, the loan is anyway standard. The loan is very clearly standard because the loan carried a bullet repayment loan, did not require in servicing.
There was no
So
servicing.
it
Right.
cannot become an NPA. So end of 12 months, it's anyway standard still. The borrower pays me interest, he can renew the loan. How many times can he renew the loan? I don't see any restrictions. The
There's no
borrower can keep the gold, maybe keep servicing interest and keep the borrowing also alive. That seems to be permitted, though I don't think that would be very right in terms of a lending decision. Because eventually every loan is against gold doesn't mean the lending is supposed to be permanent. Every lending is supposed to be at someday redeemed by from out of the income. Every loan has to be intended to be repaid at some time from out of the sources other than the value of the gold. That's the
And
whole
I think the
idea.
credit assessment also talks about
That
assessment of the
borrowing
borrower's
abil-
credit
borrowing
worthiness.
ability
Right.
to repay.
Right.
So ability
Not
to
just-
repay doesn't mean ability to repay from the gold.
No.
That's a collateral. Ability to repay means from his income source.
Right.
Every lender, if the lender constantly keeps on taking the interest and keeps on renewing the gold, I think that's irresponsible lending. And somewhere I think once again regulator would probably try to hit against that practice.
Right.
Anita.
I think that would be it for us on the gold lending directions. We hope to submit certain feedback to the RBI as well,
Of course,
and
of
we will
course.
await for the final guidelines to be issued.
Absolutely. And thanks everyone, Anita. Thanks everyone for watching this video. Thank you. Thanks very much.
Thank you.
Bye.